José Pellicer, you are Global Head of Investment Strategy at M&G Real Estate. Thank you for joining us again on BiTV.
Glad to be here.
The pleasure is all ours. We're here today to discuss M&G's recent half-year report, which is entitled Global Real Estate, Have the Storm Clouds Passed? Please allow me to ask you this question because after a very difficult first half for commercial real estate investment in Europe, with strong repricing, investment volumes going down, maybe the question is, are the clouds passing at the moment?
And I think that's a very good question, because it is very hard to know whether we are living the calm after the storm or the calm before the storm. We're in a period of calm at the moment, but it's quite clear that liquidity is down, and that pricing, the price that buyers want to buy at and the price that sellers want to sell at, are not necessarily the same thing. Therefore, prices, it looks like in a number of sectors, they still need to adjust, particularly in a world where the risk-free rate is almost 4% in the Eurozone, and therefore real estate needs to give you a risk premium. The risk premium can come from income or can come from growth, but clearly the market needs to adjust for real estate to offer that risk premium.
Thank you, because your report mentions that banks have significantly less appetite, to lend, and that their retreat provides opportunity for non-bank lenders. Should we expect institutional investors to approach a real estate from the debt vehicle side rather than through direct equity investment as they navigate, as you say, a difficult time finding the risk premium?
I think that there are opportunities both on the debt side and on the equity side. Obviously, the debt side is an amazing opportunity right now. There are loads of refinancings. So imagine a transaction that was carried out in 2020 with an income yield of 3.5% and an all-in leverage cost of 1.5%. That needs to be refinanced. If it's refinanced, then the debt cost might go up to 4.5%, 6%. Now, how can you finance that on a 3.5% yield transaction? So clearly, all of those transactions are going to require a recapitalization. This recapitalization can be done as debt or as equity. But clearly, this is going to be the biggest opportunity for cash-rich investors, either on the debt or on the equity side.
Okay, thank you. Your report also states that over-leveraged investors, maybe, or those who have been overly exposed to riskier property, shall we say, may suffer. And as the market faces an important funding gap and refinancing challenges in the coming months, should we expect European lenders to be under an increased stress as they face this situation?
Well, I think that what the report says is that we are nowhere near the global financial crisis. In 2006, 2007, it was quite common to do real estate transactions at 85, 90% leverage. I used to sit next to an opportunistic team, and that's the kind of leverage that they used to take on deals that weren't particularly safe. So that team, unfortunately, is no longer in the market. But you can clearly see that at those levels of leverage, a global financial crisis was almost inevitable. Now, fast forward to today. Today, banks are far better regulated, particularly in Europe, and they have a much bigger capital chest. The kind of lending that they have been embarking on has generally been safer and more cautious. So answering your question, I think that banks are in a better position. Now, does this mean that there won't be any bank that will be under threat? I cannot say that from where I'm sitting now. I don't know. Will there be banks that will suffer? Possibly. I don't know. But I think that the key to understand here is that we're in a better situation. This is not the global financial crisis, but recapitalizations will be necessary.
Okay, and maybe the question is, therefore, having said all that and having talked about investors needing a recapitalization with banks maybe less inclined to be let's say open to open their books or maybe a little more prudent in their approach. Could we say that the difficulties that are bound to happen for some investors looking to refinance might be the next source of investment opportunity, in European commercial real estate markets?
Yeah, I think that if you are in the debt world, or if you are in the medium risk world, in the value add world, I think that absolutely this will represent a big set of opportunities. Imagine the following scenario. You are a developer, you have a big land bank, a big development pipeline, but in order to develop, you need development finance. And then banks are not willing to provide development finance. So in order to keep your business going, you need to capitalize some of this development pipeline. And that is without you being in distress, right? None of your deals are in distress, but you need to recapitalize that development pipeline. And that's an example for a developer. Again, look at the example I said earlier, right? 3.5% yield, a refinancing at 6, that will require recapitalization. That can come from equity or that can come from debt. So the borrower, the investor, can basically say, well, I'm selling the deal, I'll have to incur a loss myself, or I'll basically look for more expensive debt at a higher level and expect that the market recovers. So in some cases, the market will recover, and therefore the borrower will save itself. In other cases, the market will not recover, and therefore the borrower, the guy that bought at 3.5%, will have to give the keys back, or will have to sell the deal and incur a loss.
Okay, thank you. So from what I understand, the storm, maybe a storm has passed, but that doesn't mean there is not another one ahead, maybe.
I think that there clearly will be situations that will require recapitalization, and that there will be opportunities in real estate, and there will be some price adjustment in certain sectors and in certain types of properties. But I think that one key point to take away from the report is that this doesn't look like the global financial crisis. This is a mini version of it.
Okay, duly noted. Thank you very much, José Pellicer, for your time. It's always a pleasure to have you on BiTV. Thank you all also for being with us, and we'll see you soon on BiTV.
Thank you. Glad to be here.